This is nothing new in the story of leverage. And so in every cycle, what happens is various actors, companies, take on more and more aggressive positions using leverage to goose returns, which is age old. It works. It definitely works. Now, what you're going to find in this situation is many crypto operators, particularly lending platforms, have never operated it with such volatility before. So they were in the slow growth from Bitcoin, almost a decade ago, from $800 all the way to 60,000. And all along the way, some of them became really aggressive in using leverage, which is the traditional hedge fund model. Now, what happens, and this happens in equities, it happens in bonds, it happens in real estate, it happens in crypto. Crypto's the Johnny-come-lately new asset class with a whole lot of newbies in it. You're going to see a whole series of these actors get crushed to zero over the next few months. In the contagion of leverage being caught offside with the lack of liquidity. Voyager is not that big a deal. It's kind of irrelevant in terms of, this is a diversified shareholder base. It's not FDIC insured in any way, so it's not putting any stress on the government systems in any way. All the shareholders should consider themselves educated, no different than when you go to Las Vegas, put it all on black, and it's red, you lose.
Hey guys, welcome back to Library of Wealth. Today we have investor Kevin O'Leary with the latest crypto and market update. O'Leary says the deficit of Voyager's liquidity is actually great news for the market because this will teach people about which business models will fail and which ones will succeed. Everything built on business models that are faulty or can't sustain volatility will be gone. This event will leave the industry more secure and more powerful. The investors who have been bankrupted will have been able to learn from their mistakes and start again. O'Leary says to protect your financial assets, you need to own your own crypto without leverage and be able to understand the counterparty risks. After all the litigations from the bankruptcies are over with, we'll have information on everyone. Let's check out this interview with Kevin O'Leary as he gives us his take on building the new stablecoin policy and how the cryptocurrency market will excel in the next quarter. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
That's exactly what's happened here. But the great news about this and why this is so good for the market and how this helps the crypto market is it educates the business models that aren't going to work. So it's like taking a big spatula from the sky and scraping all out of the market. And it's going to happen very, very quickly. So anything that was built on a business model that is not going to work or can't sustain volatility is going to be gone. And it's a good thing. It's a wonderful thing. It's going to leave the industry much stronger. Yes, we must mourn the investors that got wiped out to zero, but even they are better off in the sense that they've been educated. You own crypto without leverage and you understand your counterparty risk. Don't worry, by the time all the litigation is over from all these bankruptcies, you'll know everything about everybody. Lawyers are really good at doing that. And there'll be tons of class action, if not just straight on litigation, to go after any assets they can get. And that is sort of, when a fish dies in the ocean, it goes to the bottom and that protein is reprocessed by slugs. And I'm not saying lawyers are slugs. They have more than single cell proteins, but they know how to get the last drop of any value there, and they're going to get it. It's going to take 5 to 7 years, but all of this is good. So when I hold crypto, and I know it's very volatile, I have zero leverage in any of my positions because I know tomorrow morning I could wake up down 38% in any token, any coin, any project. And really, that's exactly what's happened. So, but if you put on leverage, you learn the very, very important lesson. You go to zero.
O'Leary has noticed that people believe crypto will be synchronized all at the same time, which isn't what will happen at all. O'Leary believes creating a stablecoin policy should be prioritized because they represent a very capable and structured payment system. He also thinks we can obtain bipartisan support between both sides bolstering the dollar as the default for global purchases. The reason the dollar would be the chosen default currency is because it's used to designate most commodities. The only issue is, it's extremely inefficient to transfer the dollar into other currencies.
People think that crypto, the entire sector, is going to get regulated all at once. That's not going to happen. The most likely scenario, and this is a personal opinion, but one I've been working on in Washington along with others, is that we would like to get policy on just stablecoins first, because stablecoins represent a very powerful and efficient payment system. And we think we can get bipartisan support between both parties supporting the American dollar as a default currency for a global payment system. It's not going to be the Chinese yuan, it's not going to be the Swiss franc, it's not going to be the euro, it's not going to be the British pound. And the reason it would fall and default to the US dollar would be that that is the currency used to denominate most commodities. And so the challenge you have right now, and why there's so much pressure to solve this, is it's very inefficient to transfer US dollars over to Geneva, then put it into Swiss francs, and then buy Swiss Nestle stock or whatever it is you want to do over there. It's really slow, very inefficient, very costly, not transparent, and not easy to audit. And so all of that problem goes away with a stablecoin. Now, the proposed policy that you'll find in granular form in both the Haggerty and Toomey bills, and I've met with both of them, as many others have, this is very simple policy. What it looks as, it says, okay, for any stablecoin, an audit every 30 days. And any asset underlying, holding up the value of the coin or token, cannot have a duration of more than 12 months. Now, you've seen that policy before. It's called a money market fund, and you'll find it at Fidelity and Putnam and many other financial services entities that are FDIC insured. Circle, if it wished, that issues USDC, could become a bank. They could be FDIC insured if they wanted to, but they are sort of leading the pack with crypto in terms of payment systems under a stablecoin that has not broken a buck. So you've seen even Tether trades below $1. It's 0.999 right now. And so when you break a buck, you lose a lot of confidence. So what I'd like to see happen here is that we regulate stablecoins first because of their utilitarian value within the crypto universe, and that get done in this calendar year. And the reason that might happen is Toomey is retiring, and he is a driving force, as you know, on the Hill, and is really behind this momentum and this bill, and has lots of support from both sides of the aisle. So I think that's good.
O'Leary states that all problems will disappear once a stablecoin policy is established. The policy will state that every stablecoin will go through a 30-day audit, and any inherent asset supporting the value of a token cannot continue beyond 12 months. O'Leary says this policy has been seen before and is called a money market fund. This fund is found in many financial services and entities that are insured by the FDIC. O'Leary says Circle could become FDIC insured, but chooses not to, as it's the forerunner in crypto payment systems. O'Leary believes a stablecoin policy will be set in place before year's end because the CEO of Circle is a huge force behind the movement and has supporters on all sides. He also feels stablecoin regulation should be prioritized because of its practical value within the crypto space. What do you guys think about the stablecoin policy being put in place and what effect it will have on the crypto market? Let us know in the comments below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.